Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are looking at Vistra Corporation, ticker VST. And we're starting this out a little bit differently from how we typically do. This is how I keep track of my positions and how I organize everything. And I want to give you guys a look at what I have on this stock before we get into actually looking at the numbers for it. So it has a beta of 0.97, which means it basically moves in line with the overall market. I own 100 shares, which is about 8% of my portfolio, and $2,522. My average cost was $17.34, and it's currently trading for $25.22. I had an initial investment of $17,034. I have a fair value on this stock of around $20 a share, and at its fair value, I had this stock, my position, about $2,000. Right now, that position is $2,522. So I'm trying to decide whether or not I want to keep this or if I want to take those profits and go find another stock that I'm able to see gains like this on. They currently pay a dividend yield of 3.06. From what I bought, with my average cost, I'm getting a dividend yield of 4.45. They pay out 77 cents per share, so they pay me $77.20 a year, or a quarterly dividend of 19 cents. And that's 5% of my total dividend income. Between dividends and capital gains, I have earned $136.44 off this stock. Off covered calls and spreads that I've traded on this stock, I've made $572. This is one of the early ones where I was doing a lot of put credit spreads, when I thought that the stock price was low, and putting it all into shares. And combined, I am looking at a total gain on the stock of about $1,500, or an 86% return, having been paid back for 40 of my shares, or almost or 28% of my initial investment. So now that we've looked at that, let's get into the chart. Here we have the chart. We see that this stock continues to run. It was up 2.5% today, up almost 0.7% after hours. It currently sits at a price of $25.39 a share. It clearly first came into the market in 2016, late 2016, and it's kind of traded in a range since then. It's definitely on an upward trend. I mean, it peaked back in late 2019 at a share price of $27, and I was buying in down throughout this range. I was probably doing some buying back at this low point as well, because I thought there was value in the stock and it was worth at least $20. Apparently I was right, but will this continue? That is the question. So, I mean, we see the range here. It really hasn't gone down below $14, and it's had trouble when it's hit the mid $26 to $27 range, which it's headed back up towards now. But let's get into the financial numbers and see what's going on with those. And here we have the financials for the stock. So I kind of gave up because I saw so much red that I thought I was going to sell out. And then when I started to look at these earnings, I thought it might be worth holding on to. So we see top line growth of about 5% year over year, but cost of goods growth of 18.3%. That is a huge red flag. This last year, it was a bit better, almost 14% top line and 12.3 cost of goods. So that top line did outpace the cost of goods. For a gross profit that keeps dropping, it was really good in 2019. 2021 to 2022, they actually saw some good progress. For net income, they ran at a loss in both 2021 and 2022. Huge red flag. For expenses, we see the expenses are increasing rather quickly, 14.75% compared to that 5 on the top line. It's not a good look. Their EBIT, 15.99% year-over-year growth. Great stuff. I mean, it's really only because 2019 was so low. This last year was only 1%. Gross profit is declining. 2019 was a great year. They're back on an uptrend after 2021. Net profit percentage, we do see negatives because they had a negative net profit. They were operating at a loss. Again, massive red flag. So their earnings are negative. They had a positive book value that turned to a negative. Their free cash flow is negative. Their share count is, they're buying back at an incredible rate. They have a good dividend that they are growing very quickly. So there are some positives to this stock here. But the way that we value the stocks, earnings, negative, 0, worthless. Book value, negative, 0, worthless. Cash flow, negative, 0, worthless. So the only value off these historical trends is the dividend. So back when I was buying in, I was looking at these 2019 numbers, and these were good. But they've had a rough time. They're trying to turn it around. We'll see if they're able to do that. We see that typically it trades at a negative PE with negative earnings. Back in 2019, it was at a 12 PE, but we can't even calculate what it currently sits at. And typically it's around a 2.7% dividend yield. It's slightly higher more recently. So on the dividend factor, there could be a bit of value there. Since there's no earnings or earnings growth, can't really calculate the fair value. So looking at all that, I want to sell out of the stock and find something else that can fetch a return. But let's look at these earnings and see what they have to say and if they are on the right track. We'll start here with the summary of financial results. So we see that last year's loss was turned into a profit, significantly better than what they had. The EBITDA by segment. So retail, they saw a huge drop off. That's where most of their profit came last year, and it was operating at a loss this year. Texas, they more than doubled. East almost completely dried up. It was 148 last year, 1 this year. West nearly doubled. Sunset quadrupled from 44 to 144. Corporate and other, relatively flat, negative 10 to negative 11, and asset closure, negative 41. And then we see their guidance for the year. They expect an EBITDA of 3,400 to 4,000. These are in millions, as always. That would come in lower than they came in last year. Last year, they came in at 4.5. So a 4, we'd be looking at a more than 10% decline. They plan to repurchase shares. They say that they still have $4.25 billion to repurchase by the end of 2024. So that will help to bolster the stock a little bit, drive more value per share. And this is what we really want to look at. Operating revenues up a lot, up about 1,000 from last year, 30% or so. Cash flows, they went positive with it, from negative 284 to positive 698. Following all of this cash flow, they end up with about half the cash on hand than they had at the end of last year, or the same quarter of last year, I should say. They don't even give us a balance sheet here, so that is the information that we have to go off of. I mean, they've turned the negatives into positives. I'd have to run the numbers for everything that I see. I'm not sure that it convinces me to hold on to the stock. I'm really thinking that I should take my gains and go elsewhere, because even if they are turning things around, the stock is at a relatively high price. And if it were to drop back down, back towards the 20s or below 20, I'd be willing to buy back in. So I would probably give this a hold. It's looking like they're on a turnaround trajectory, potentially overvalued. We don't exactly have the data to be able to calculate that with all those negatives. Would I recommend buying it right now? Probably not. Sub 20, closer to 15 would be ideal. Would be the zone to start buying up shares. That's all for this one. So I want to thank you guys for watching. Please like, comment, subscribe. Let me know what stocks you want to see, and I'll catch you next time.